Hello, everyone. Welcome back to the channel. Matt with Green Bar Trading. Welcome back to another weekly watch list video where we're going to go over everything that you need to know for the week ahead. Before we get into it, hit the thumbs up for the video. And if you are new, consider subscribing to the channel. All right. So we start with the earnings for the week. So Nike is the last stock to go in the Dow for this earnings season. Now, the next earnings season starts with the banks in a couple weeks. That should be interesting. But as of right now, those are your earnings for the week. Okay, now going over to the sectors and how their performance was relative to the other sectors. So energy and financials for the week had a very rough time. The banks just completely have been decimated on the 1 month relative performance. You can see here, financials are down the most, along with energy. All right. When those two are down, that's suggesting possible recession, economic downturns, an economic slowdown, and that type of thing. So that's what's starting to happen right now. On the 1 week relative performance, technology has continued to outperform. It's been a very solid performer as the bond yields have tanked. All right. So that's where we stand here on the economic calendar. What we're seeing this coming week is Wednesday. Wednesday, circle this on your calendar. Wednesday is the FOMC rate decision, followed by Powell's press conference. And I'm sure a lot of questions will be asked, especially about the banking industry and how they've had to come and sort of help out with funds to bail out those banks. And the rate decision as well. I think a lot is being priced in that the Fed may even pause its rate hikes. And you can see that with the bond yields, how they've gone down so much. They're just simply not taking into account that the Fed is, supposed to be raising rates because of the bank sector kind of getting hit there. The market is starting to price in that the Fed might not raise rates. Personally, I think they're going to continue to raise rates, and I don't think that's priced into the market. If Powell comes out and says anything hawkish, watch out for the NASDAQ market to come crashing down and watch those yields go up. If he says anything about keeping rates high for longer, still, even with the banks having a tough time. So Wednesday is the most important day next week. I don't care about anything else going on. Nothing else on the economic calendar is as important as that Wednesday FOMC meeting. All right. So going over to the bond yields, something that we're talking about. The bond yields are down huge. The 2-year is at 3.84. Okay. That one is supposed to show where the Fed funds rate is going to be. And it's certainly not at 3.84. So the bond market is telling you that the Fed is going to have to pivot. And if they have to pivot, that means that they're breaking something. Hence the banking sector. And that's why the yields are down so much. So that's the bond yields. Now going over to the SPY, our compass, we're going to go in and take a look at the technicals. I have the 200 moving average, the 50, and the 20 EMA I use for momentum. All right. This trend line right here. All right. This trend line was broken. When a trend line of this magnitude is broken, a lot of times you'll get a retest of that trend line. We saw that on Thursday, and then we saw Friday sell off. We had an inside day on Friday. That doesn't mean anything. It doesn't mean that You know, the market can't continue to kind of rally out of this, but it does show weakness. So we rejected this trend line. We rejected the 20 EMA basically to the penny. And that's where we sit now, trading under the all important 200 moving average. The market, I'm going to tell you guys, when you're trading, if you're trading this market, it is extremely, extremely difficult to trade. When you get a day on high volume breaking out over the 200 moving average, and then the next day just coming back down under it, on high volume, it's just very tough. And the VIX has been representing this volatility very well. I'm going to go into the VIX in a second. But that's where we stand there on the SPY. If we incorporate our volume, okay, you can see here the point of control is kind of this red line right here. And that's also where we rejected, all right? So this was a multiple confluence area here to go short from. If you were trading, if you were swing trading, you had the 20 EMA, you had the trend line, and that point of control that when you're under it can act as resistance because there's a lot of supply here at the point of control, all right? And that's where we pulled on back. So that's where we stand right now as far as the SPY goes. So, you know, for the coming week, I really think that the FOMC is going to set the market on its next path. So I don't have any predictions other than these are the key areas to be looking for. So now going over to the Qs. The Qs have been a very nice and surprising outperformer on the whole year, right? Since the start of the year to now, we're up almost 15% on the Qs, on the NASDAQ. That's very impressive. So we saw this channel here. We saw the breakout on Thursday, and then on Friday, you know, kind of came up to the top of this area where we've seen in the past there be some issues. You can see here this cluster here, couldn't get higher here. Same thing here. And then we're just coming right back into that area now. All right. So the Qs are starting to get a little bit overdone, but we did consolidate down here. This is an extended bear flag. You can see here the move up, that flag, and then that breakout. So that's where we're currently sitting on the Qs. The only thing I would say and be aware of, you can see down here, I have this advanced decline line. Now, I'm just going to take off the volume. We don't need that for this right now. You have the advanced decline line, right? Diverging from the RSI. All right. What is that telling me? If you have more stocks declining than advancing, you have this downtrend here, but the NASDAQ market breaks out. What is that telling me? That's telling me that this move on the Qs that we've seen here the last 5 days is really just a few stocks that are making this market go up. Now, if we go over to the QQQ top holdings, you can see Microsoft, Apple, Amazon, Nvidia, Google, Meta, Tesla, right? These are the most weighted for that QQQ. Meaning, if these are going up a lot, odds are the Qs are going up a lot. So we can see, and I'm going to go on to the charts in a second, if Microsoft, Apple, these top stocks, Nvidia, Meta, if they're going up a lot and they're hot on RSI, that's why the Qs have gone up, but I would be very careful. So let's go over and take a look if this move, because the advanced decline line is suggesting we should be going down, not up. So let's take a look at Apple. All right. Apple is at previous resistance. All right. Watch out for this. We can look at Microsoft. Microsoft also, see, this is why the Qs are doing well. It hit its high for this year. This is up a tremendous amount in the last 5 days. All right. Remember, big weighting on the Qs. So that's why that was outperforming. NVIDIA. Another one. Huge outperformer. All right. This market is going up on the backs of just a few stocks. Meta, take a look at that one. Also, a stock that has outperformed. These stocks here are getting very hot on RSI. You can see overbought levels going back to Microsoft. Overbought on Microsoft, NVIDIA. Overbought on NVIDIA, Apple. It's not overbought, but it's up there. AMD is also another one. That RSI is extremely hot, also at highs, and that's a big weighting also on that QQQ. So what I would suggest, since every time it gets to overbought levels, we've seen pullbacks. Just be careful of that. It looks like the Qs are running up just on the back of about 5 stocks. So that's really important to know. You have the advanced decline line going down, but you have the Qs going up because of those bond yields, and people trying to find some growth anywhere. All right. So that's the QQQ. And now we'll go over to the Dow Jones. Kind of the last couple of days just hanging out below the 200 moving average. Very weak. The Dow is definitely looking a lot weaker as it's down on the year than the other indexes. Also, being hurt a lot by the banks is IWM. That's the Russell 2K. This is at support right now. So I would look for maybe a bounce on this one. At worst, I think that you can revisit maybe the lows back here, which are around 165 or so. But right now, it looks like it's consolidating here. A lot of volume. It is oversold at the moment. But like I said, this can last a little while, especially because the banks, those regional banks and smaller banks, make up a lot of the IWM. All right. So let's just keep an eye on that. Now I want to go over and let's look at the VIX. We were very calm here, right? Very calm for the first couple of months of the year. And then we saw these spikes. This is the last 6 days where we've seen spikes to 31, to 30s, right? It seems like when this happens, it could kind of last a little while, right? A lot more of this volatility. And I can definitely see that happening, especially on Wednesday with Powell speaking and that rate decision. So that's going to be it for me. I hope you guys enjoyed the video. Remember to hit the thumbs up, and I will see you on the next one. Take care, guys.